Well, fintech company Marqueta making its big public debut on the NASDAQ today, getting about an 18% pop in the session. Shares trading at $31 a share after pricing at $27. Let's bring in the CEO and founder of Marqeta, Jason Gardner. He's joining us today. And Jason, congratulations on the big debut. We have seen a lot of high growth fintech startups come to market. On the back of a year where you've seen so much growth with this digital transition or transformation that's happened, talk to me about the timing of this and why this is the right time for the company to tap into the public market.
Well, thank you for having me. It's a very, very exciting day for Marqueta. So we actually planned for an IPO about 18 months ago, and you end up picking a date probably about 6 months before the actual event. And a lot of work goes into this, a lot of work from Marquetans, from our bankers, from our consultants and our friends. And it's truly an exciting time. So we're really, really excited about today.
Let's talk about the business model here. For those that aren't familiar, Marqueta helps companies issue credit and debit cards to a number of companies, a lot of tech companies that you have partnered with here or count as your clients. There's certainly an argument to be made that you are riding a lot of momentum on the back of the pandemic. When you look at the numbers from last year, total processing volume alone, $60 billion in the last year. How sustainable are these numbers when you consider things slowly getting back to normal?
Akiko, we're just scratching the surface. We process $60 billion, which is less than 1% of the $6.7 trillion of carded volume in the United States. $30 trillion globally. And if you think about our customers, Square, DoorDash, Instacart, Affirm, Afterpay, Sezzle, JP Morgan Chase, Goldman Sachs. Yes, there was a big boom for a lot of companies last year. Our customers' success is our success. And many of these companies are essential services. So as we saw them ride the tailwinds last year, a lot of suffering around COVID, but a lot of businesses did well, and we drafted off that success. We had a great year last year, and we look for that to continue.
And Jason, you pointed to a number of those tech clients that you have. Square, a really big one, if I'm looking at the numbers correctly here, responsible for about 70% of net revenue. Is there a bit of a risk here in customer concentration?
Square is a phenomenal customer. Again, our customer success, specifically Square's success, is our success. And we focus on that with relationship, technology, innovation, and our ability to operate at massive scale. We power the cash card, add ACH direct debit with that. We have a separate relationship on the merchant side with the Square card. And these started back in 2017 from scratch. And they've built phenomenal experiences for their customers. And we've obviously seen that grow significantly. We're significantly last year. And if you really believe that the digitization of payments, that companies like Square will continue to build market-leading products, we will continue to seek success from their success in building these products. And that is going to continue well into the future.
And like many startups, you're not profitable just yet. You posted a net loss of $47 million last year. What's the timeline looking like on that front?
Well, again, if you look at simply the opportunity ahead of us, and we're just scratching the surface in this, we will continue to invest in Marqueta technology. We'll continue to invest in geographies. We operate in 36 countries today. We see a lot more growth. Certainly, paying with cards is a global phenomenon, whether it's online or offline. So we want to continue to invest in that market and continue to grow.
Jason Gardner, Marqueta founder and CEO. Congratulations again on the debut. It's good to talk to you today.